See, the stress situation continues. However, as in the last 6 months, what we saw was a definite improvement in the visible order book. It is not as big as it used to be 5 years ago at $110 billion seen forth for the year. It has already dropped to 20 billion and less, but that has started picking up. So you can actually see an improvement. But the substantial improvement is coming in only roads, the transport sector. The others are yet to fully pick up. Private sector demand is very poor. There is no practically any capital expenditure. So it's a mixed signal, but it's definitive improvement from a point of view when you talk of basic infrastructure.
So the government has been talking a lot about providing an impetus to the infrastructure sector. What is your view on the pace of reforms that the government has taken in terms of the sector that you belong to?
I think here what they're really talking about is government expenditure to create infrastructure, to give a slowdown, to counter the slowdown. We must understand that everywhere the words used are crank the economy, the kickstart, counter slowdown, which means we are in a slightly static situation. And we have to break out of that is what the objective is.
So what's the need of the hour, Mr. Gulabchand?
I think the finance minister is right. There must be higher investment in infrastructure and not wait for private sector to invest, but government itself must invest. This is one. Then high interest rates continue to bog the industry. These interest rates are ridiculously high. And we still don't understand the logic of keeping them high. Because only a consumer price index of food, which is supposed to be. But 2 years of drought, 5 to 6% inflation in a growing economy is not inflation. So what is the reason for keeping it at these ridiculous rates?
So are you hopeful that the banking regulator will perhaps relax interest rates further in the coming quarters?
Well, he has not given much hope so far, but we do hope that he will see the sense of doing it this year.
One question on consolidation.
We'll have to come down drastically. We are talking about at least 400 basis points in order that the investment cycle starts so the IRRs can come down to below 10%.
All right, that will definitely be quite a booster dose of sorts for the entire economy.
Second is if you take all the balance sheets and you reduce the interest rate by 400 basis points across the balance sheets, you see how many will move out of the stress. Good part of the NPAs are this excessive interest rate also. So I think it has to be cut down to boost the economy. We have tamed the inflation enough. Food inflation is a function of a minimum support price. And I think it's time to do that.
So one question on consolidation, because recently the RBI has come up with regulations wherein banks can in fact convert the bad loans into equity and perhaps take over some of the stressed companies. Do you see M&A happening because of this regulatory flexibility?
I think you're not studying the situations enough. You need to take a look at it. This has just begun. We don't know how it will pan out, where it will go. When we see a few cases and what is being done in them, we will be able to make a comment.
Actually, there are many SDR cases, around 9 or 10 of them, which have been officially announced.
Please. Announcing SDR and making a successful completion of SDR are two different things. So what I meant is, what does it mean? Where is it going? Has it solved the problem? How does it solve the problem? Until we see a few cases, very difficult to comment on it.
All right, point taken. My last question, what are your expectations from the budget?
Well, budget expectation always for me, first thing is lower taxation. The less the taxation, more in the hands of the people, the more it will be effectively invested and growth will come. India needs the growth because it has to provide 300 million jobs in the next 20 years, 1 million jobs every month, new jobs. So it needs investment very badly. So creating a climate for investment, first case is reduce taxes and make a genuine list of all the things of ease of doing business. And let's have a clear objective and a time-bound program to make those things happen.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.